Right. Waiting for Sergey here. Hello, everybody.
Hello.
Welcome to CoinFund Q&A. We have Sergey Nazarov today from SmartContractcom. Sergey is working on a platform for oracles that connects big banks and public blockchains. Sergey, do you want to tell us a little bit about your product and what it does?
Yeah, sure. So at SmartContractcom, we've been building around smart contracts for over 3.5 years. So since the stuff kind of started to emerge in any kind of more usable format. And the problem we've consistently run into is how do you get smart contracts to go beyond tokens? So how do you get them to mimic real world agreements? And how do you get them to mimic those agreements on two key dimensions? So the first dimension is, how does the agreement know what happened? Kind of how does it know that somebody made a delivery? How does it know that a price changed? How does it know that some objective measure of performance was executed on? And the second dimension is payment outputs in the format that users want to receive. So you probably want to pay end users in whatever vertical you're in, or consumer or retail or institutional, whatever it might be. You probably want to pay them in the format that they want to receive payment in. And we started out years ago basically sending people Bitcoin to pay for shipment of various things from suppliers. But at the end of the day, we ran into the problem that a lot of end users didn't want Bitcoin yet. So basically what our product does is it solves this middleware problem. So it solves the problem of, how do I get data into the contract to prove performance? And then how do I get the contract to make a payment in the format that an end user wants to receive? Over the next, I guess, next 2 to 4 years, 2 to 5 years, there's still going to be a substantial amount of users that want to receive bank payments. And so it's an incremental step, right? Like, I have a strong belief that there will be central bank digital currency. There will be all kinds of cryptographic token-based official currencies that will eventually replace many of these systems that people want to receive payment in today. But we can't just kind of all wait for that to happen. If we want to make smart contracts that provide real-world value, they need to be able to prove performance, and they need to be able to settle, to pay in the way that end users want, not in kind of the way that we think they should want it, is the idea.
Got it. So do you see sort of the major use case of these data oracles being between banks and consumers, or do you see it more like in a peer-to-peer context or something like that?
Well, really, more than anything, it's a developer tool. So right now, the people making smart contracts are developers. There's a lot of complexity, and there's a lot of nuances around security and how do you write a contract the right way. And so I don't know how many consumers or even people in the legal profession without an engineering capability are going to be making smart contracts over the next year. Right now, it's mainly developers. And so our goal as a company is to give the people making smart contracts secure, easy access to the resources that their smart contract needs. So today, that's developers. So today, developers need to be able to get data to the contract, and they need the contract to be able to make a payment output that their end user wants to receive. So really, our target users for this is really two types of developers. There are the traditional fintech, insurtech, IoT web developers that want to add smart contracts to their existing application. And that is easily enabled by us because now you have this interface that can talk to their already built APIs, basically. They can very easily have their kind of application send instructions to a contract. The contract can return back to them what it did, and it can all function in a much easier format for them without them having to run a full node or figure out many nuances around signatures and tokens and any of these other things. The other group of people are building pure play decentralized applications. And that's where a lot of this is I would say, mission critical. It's critical if your decentralized application is going to interact with things other than tokens, right? If your decentralized application is basically a type of financial contract, right? A type of programmatic financial contract. And the only thing that triggers your contract is the movement of tokens. That information is native to the network you're on. And so you don't need this in that case. But my assumption, our assumption, is that only about 10% of use cases in the long term will be focused on moving around tokens and ownership and things like that. 90% of use cases will be around mimicking real world agreements. And in mimicking real world agreements, they're going to need to basically get proof of performance, right? They're going to need to know that I have an insurance policy for theft around my warehouse, and the insurance smart contract needs to know that the magnetic door lock was locked, right? Or I have a shipping agreement or a trade finance agreement, and it needs to know that the ship is in port and that the ship has cleared customs via the customs API. So basically, if you want data-driven contracts, or if you want the efficiency of data-driven contracts, you need to make them data-driven first, right? That's like the first key piece of this.
So I would imagine, and where I have a little bit of experience with this is that I, donated some of my time to do the hackathon last year, which resulted in Aetherisk, an Aetherisk white paper, right? And Aetherisk was basically like a parametric insurance smart contract, which would take the external data of whether a plane arrived at its destination on time or whether it was late, and also by how long, how many minutes. And so it just, it sounds like the general use case of the data-driven contract is that you take data from the outside world. It could be like physical data about, hardware components, about ships, about trucks. It could be maybe market data, right, about pricing, and so on and so forth. But the key point is that how do we get the data into the contract so that the contract can react to it? That's really, what makes the smart contract really powerful, is that when you have that sort of external feed from the outside world, because otherwise the contract is just kind of a glorified, state machine. Do you agree with that view?
Well, I think it's the contract that doesn't get data is good for things that don't need data. And so that's a subset of use cases that, in my opinion, is relatively small to the larger subset of use cases that mimic financial agreements, right? Like everything you just mentioned, insurance or shipping, so trade finance, and most securities-like things need something like a market price or interest rate data feed. So I think you can still do things now without data feeds. It's just not it's not going to be where this stops, right? I literally think that 90% of smart contracts are going to be triggered by an input in the form of a data feed. And there's more and more of this data appearing, right? There's more IoT data to prove performance. There's more and higher quality market data. Like the amount of data out in the world that can prove contractual performance, it's not decreasing, it's massively increasing. And we're talking about a very secure, tamper-proof way to basically form financial agreements. And what we're saying is we should form financial agreements with objective proof of performance from data feeds. And in order to do that, you need a secure way in which those data feeds are going to make the financial agreement go to the next state, right? Now this is basically the problem that we've been looking at and working on for the past 3.5 years. And the conclusion that we've come to is that there's basically two good approaches. One good approach is you apply decentralization to this oracle mechanism. So you basically seek to create the most decentralized oracle capability possible. And the way that looks is basically in two stages. Stage one is you will have people who can act as oracles to resell services, right? They may not provide the service. They may not be Thomson Reuters. They may not be a data provider, or they might be a mid-tier data provider that is actually really just the reseller of other people's data most of the time. And they will act as a third party that gives that data to a smart contract and takes on the responsibility of doing that. Now, that approach is a relatively decentralized approach because it doesn't require something like a single Oracle service. So the approach that we're not fans of, and the approach, like, we have an Oracle service. You can go on SmartContract.com, and in 11 minutes, you can go from having an API to having a smart contract that takes the API's data and gives it to whatever contract you want. Like, we have all that, we've built all that, there are people using it on production.
So real quick, just to get a little bit of color on that, like, my experience with things like that is mainly around the Oracleized product. But let me just ask you just on the mechanics of this. So I have an API. Let's say this API you can query, you give it a parameter, I'll give you like a flight number, and you tell me if that flight, yes or no, was delayed. Let's say that's the data. So what you're kind of saying is that people today can go to SmartContract.com, they can get an account, install that API, give them that API, and basically you guys will spit out a smart contract that has a function that says, if you call this function in the smart contract with the flight number, I'm actually going to reach out to you, read the data that you have, and then the answer to that question will be delivered sort of back into my smart contract. Or like, can you just like walk us through how that works?
Yeah, sure. So there's basically there's different types of oracles. There's oracles that can exist on a schedule. So for many market price-based contracts, you would want them updated on a schedule. Mm-hmm. So we have a scheduling capability on the front end, right? Other oracles, you might want them to be a request end date, and you might want them to do a request only once. It really very much varies. Everything you just described is basically what we do on the front end. You can show up with an API, you can put it in, you can format how you want the oracle to interact with the API, and then you can put the oracle on something like a schedule and tell it to do X, Y, and Z at certain times. And then that'll give your smart contract, the one that's relying on this data feed as a trigger, the relevant data. Now, we've had that for years. We have people using that on production. We've had people run applications with that. We've had people take an existing fintech application like Lending Robot and basically start putting information onto the Ethereum blockchain using something like that. Now, that's fine, right? That's a good way to get started. It's a good way to get people off the ground and get started. But what I think the correct long-term focus is around how do we get to a secure and maximally decentralized way by which oracles can function, right? So the logic of our space is basically that you get some measure of security and some measure of tamper-proofness through redundancy, right? This is what people lovingly call decentralization. They basically say there's 1,000 people over there doing something, there's 8,000 people over there doing something. And now people are sitting around and they're trying to quantify what is decentralization, what amount of decentralization do we need, what we don't need. But long story short, the general idea of our space is that decentralization is a key value to how these systems should function. So what we're saying with Chainlink and kind of and what we're making now called the Chainlink network is the idea that you should have a more decentralized Oracle scheme. So it shouldn't be a situation where you have any one Oracle service provider where the aggregate contract value around that Oracle rises to a few $100 billion, and then it becomes a huge target. And it becomes a target that really you won't be able to secure. You won't be able to keep that point of failure secure. And the right way to avoid that is not to get everybody on a centralized Oracle service. It's to get as much decentralization as possible, right? The method by which you would do that is by giving basically providers of the necessary resources the ability to make an oracle, right? So right now, if you're a data provider, you can go to OracleKit/Chainlink, and you can see a bunch of other services there, and you can basically set up an oracle as a data provider, as a payments provider. If you want, you can email us and we'll help you. If you want to do it yourself, you can do it yourself. But the point is that there needs to be an open source, community-driven piece of software at a high level of quality, at a high level of security review, that is basically capable of being used by anyone who wants to give data or payments capabilities to a smart contract as a service, right? So there shouldn't, in kind of 10 years, the situation in all likelihood is going to be that origin providers, right, origin level providers, so data providers themselves, payments providers themselves, have their own Oracle interface, right? And that's kind of the body of work that we're working on and that we're building out with Chainlink.
Why do you think, Sergey, why is having a decentralized Oracle, why is that an important criteria here?
Well, let's say the whole world uses one Oracle service. It doesn't matter whose it is, mine or yours or anybody's. And then the aggregate contract value around that Oracle service gets us to a few hundred billion. And the smart contract in the middle is kind of uncrackable, right? Like you cannot, it's secure by default, uses a lot of private key assumptions, things like that. Basically, we don't want a situation where you have a security at the edges problem. That every time you want to influence a contract worth a couple $100 million or $1 billion, you would basically go and attack the security at the edges. Now, the right way to set up even a contract that you think is very critical and needs reliability about data feeds would be possibly even going to multiple data providers, right? So the more decentralized approach here may be, I have data provider A, B, and C, and they all provide market price data, and I need 3 separate sets of oracles. And then I want the data averaged out off-chain, or I want it averaged on-chain.
Got it. Cool. So we talked a little bit about the product vision. So the product vision, in other words, is basically a set of software that enables decentralized oracles. Can we talk a little bit about what is the role of your company in this, and what is the business model around this? So just for context, we see a lot of companies, especially on this show, bringing up decentralized networks, right? So monetization of decentralized networks usually happens through the digital asset of those networks. How are you guys thinking about, your private business, and also maybe the way that capital flows in this open kind of peer-to-peer way, potentially?
Right. So the role we're going to take is people that want a community-driven, open source, decentralized Oracle product. It's something we've been working on for years, and we want to build a very, very highly secure, good version of it. To that end, we've attracted advisors like Ari Jules, who used to be the chief scientist at RSA and is a co-director at IC3, Andrew Miller, a number of other people are working with us towards this end. So our goal is an open source community-driven approach to highly secure blockchain middleware that's usable by kind of anybody who wants to use it, really. If you have a JSON API, great. If you have an API that returns XML, great. If you're in the traditional banking world and you use Swift messages on your backend, we have Swift as a customer of ours, and we're working with them to see how to basically allow Swift messages to influence smart contracts on chain. So our goal is to be kind of an impartial, an impartial steward of this community and this open source piece of software, such that it supports the most off-chain standards, and such that it supports the most on-chain standards, so that it supports multiple networks, so that anybody who shows up here can find it useful regardless of what they use off-chain and regardless of what they want to use on-chain. Now, to your question of how the economics work, the approach we have now for the Link network, for the Chainlink network, is basically that anybody who knows an API can easily make money by selling it, right? Anybody can become a third-party reseller quickly and easily, but with a secure piece of software. So if I know the CoinMarketCap API and I want to become an Oracle service provider, I can do that very quickly and easily. If I know a payments API and I want to provide access to it for a fee, I can do that very easily. And the simple reality is that as smart contracts pay for the service of, I want data from these 5 oracles, which all query different data providers, or maybe they query the same data provider, or whatever it might be, those oracle operators should be compensated. Now, they will be compensated in this link token. So the link token functions very similarly to many of the other high quality tokens you've heard that are used to basically pay node operators. So the goal of the link token is, let's pay a node operator to execute key cryptographic or computational capabilities that our smart contract needs. And the beauty of it, in our opinion, is that it's kind of like buying API credits on chain, but you're doing it on a query by query basis. So if you know that you need 10 days of market price data and you need it every hour, here's what you pay them. And that's all you pay for. And you pay on a query by query basis. And the oracle operator that you've chosen, that has reputation, that has quality ratings, is used by your contract. And then his successful completion of what you've paid him for returns back to his reputation. So
are you contemplating that kind of like, if I'm putting an API on the platform, it's not even necessarily that I have to be the source of the API or the developer of the API or the source of the data, right? It's just, I'm just kind of a conduit that hosts whatever API it might be.
Right, that's right. So there's, when you talk to high-end data providers, high-end payments providers, various providers of anything, even e-signature, they are very revenue-driven people, right? They are very quarterly earnings-based people. And at the end of the day, we've had these conversations for years. And some of them were getting set up, like Swift. Others were also getting set up that we're going to announce soon. So high-quality data providers, high-quality payments, e-signature, like key services that if you want to e-sign a contract in a legally binding way, you can use a high-quality e-signature provider. If you want to make an off-chain payment to a bank, you can do that. If you want high-quality data, you can do that. Like we work with these people, but at the end of the day, if we want to capture the full breadth of everything that a smart contract, all the different smart contract use cases need, we really need a market mechanism. So we need a mechanism by which a ton of contracts show up for selling Beanie Babies, or a ton of contracts show up for selling whatever. And those contracts happen to need some kind of data feed, whether it's IoT or whatever it is. And now there's kind of demand for that data feed. Now, what should happen next is that there should be people who come to meet that demand, but they come to meet that demand based on the fact that they understand the data feed, that they can keep it running correctly. They don't need to have to build middleware, right? There should be a separate group of people that are security experts like Ari Jules and Andrew Miller and like the people that we work with that focus on giving them, on enabling them to sell whatever service those contracts need, right? Like basically the smart contract developer shouldn't be going to data and payments providers and saying, I have the best use case on earth, but I really need your help. I need you to give me access, right? What the smart contract developer should have is either through a third-party provider or through the origin, they should have a way to just pay, right? I need this type of data. I need it at this frequency, in this format, for this long, from a provider of this level of quality. Here's what I'm willing to pay. They send that into the Chainlink marketplace, and they get back offers that the contract automatically executes on. That's kind of the efficient way to solve this problem. So that really, like at the end of the day, the situation we were in, 3 years ago was we had to figure out the API and build the middleware. The situation today is you need to figure out the API, but you can just show up and use the service for middleware. The situation tomorrow should be you show up to an on-chain contract that has a list of requests you can send to it, and it will execute those requests for you and give you back whatever you need. So that if you're in smart contract land, you don't need to go into traditional enterprise land or API land and figure out all the weird nuances. Somebody's done that for you, right? You just need to pay for that service.
Got it. So again, you're envisioning an economics where users will buy the Link token to acquire service. That service is basically a marketplace of APIs that can be integrated with smart contracts. And then the providers and hosts, I guess, of these data-bearing APIs, smart contracts, are compensated in that token. Is that kind of a correct understanding?
Right. If you're a node operator, you should be compensated. You're going to be compensated for the transaction fees to get the data to the network. You need to be paid those because you're going to have to pay those back to the network. You're going to need to be paid whatever the data API costs, whatever the API usage costs are. And then you're going to be paid an operator fee as just a kind of a node operator fee. And it's part of that node operator fee of which our company will take a small portion in order to maintain the software, in order to make sure that this secure blockchain middleware is continually maintained as secure. Because to continually maintain it, you do need to kind of pay people salaries to work on keeping it secure, right? Like yeah.
Got it. So your smart contract system contemplates basically a transaction fee that goes directly to your company.
Well, yeah. So you basically pay a small percentage. You pay the node operator fee, and you pay a small percentage to the people maintaining the software. Basically, we think that's completely fair if you want that software to remain secure. The company you speak of is going to be more of a foundational structure, and it's going to be focused on driving this open source community effort forward more than anything else. So yeah, I mean, the reality is that you need to compensate the node operators, and in the long term, you probably need to pay the people maintaining the highly secure middleware. Otherwise, you're going to have failures, and then somebody else is going to show up with a better piece of middleware, and everybody's going to have to switch to it, and then they're going to fail, or there's going to be all kinds of weird enterprise pricing schemes, and only people with large budgets, monthly budgets, will be able to use it. Like we don't really want that, right? What we want is something that's open source, community driven, highly secure piece of middleware that's continually maintained at a very high level of quality.
Mm-hmm.
Right? Because the situation, like if you look at the value of a smart contract, the thing that you'll basically see as you go from POCs to pilot and production is that the scope of how people look at it, it expands to the edges, right? So if you're just making a POC, you're only thinking about, oh, the coin's moving, it's fine, I fudged some inputs, I made up some outputs, it's okay. But as you expand your thinking to the end-to-end setup, you want to be assured that the end-to-end setup is equally tamper-proof, right? You want to be assured that if you're going to put $100 million into this type of financial agreement, it's extremely secure end-to-end. And that means that there's a secure blockchain middleware that's maintained and well-made by a large group of people, like Ari Jules, who used to be the chief scientist at RSA, like Andrew Miller, like all these people who care about this, right? Otherwise, you're going to have a bunch of weird. Otherwise, every time somebody tries to evaluate a smart contract end to end, they're going to be forced to think about like, okay, I get the smart contract in the middle is secure, but what about the end to end setup? And then they're going to see like private blockchain middleware product, and then they're going to be like, what is that? Like, how do I know that isn't going to send the wrong input to my very secure contract, or how do I know that's not going to be gamed on the output, right? Like they need some assurance on this dimension.
Understood. Can you talk a little bit about how hardware oracles fit into this? Because I know we briefly touched upon that elsewhere, and I think it's a kind of a fascinating direction for everything to be headed in. So can you talk a little bit about what it means to be a hardware oracle and like how that interoperates with a system like this?
Yeah, sure. Glad to. That's an area of basically research and it's an early area that's extremely interesting and I think shows a lot of promise. So basically what that means is that you have a special piece of hardware, so something like an Intel SGX enclave, where the code running in that enclave is something that even the person running it cannot influence. Mm-hmm. So if you have a third-party reseller of data, because the origin level provider has not yet begun selling the data via an oracle, if you have a trusted hardware approach, you can basically say, I know this third-party sales provider, third-party reseller of data is some guy somewhere, or he's a company, but I also know that he cannot influence the software he's running for us. All he can do is either run it or not run it. If he doesn't run it, his reputation obviously suffers. If he does run it, we put a certain amount of trust in the assumption that the trusted hardware made by Intel is indeed secure, such that he can run it, but he cannot tamper with what's going on internally. Now to this end, we're very happy to be working with Ari Jules and the folks at Town Crier. Together, we launched the Town Crier service, which is the first version of using Intel SGX on production for smart contracts. And actually, on our site, you can go use that as well. That's kind of what we partnered on, is that you have the interface to use Town Crier on our site. So if you go to SmartContract.com and you click in, one of the oracle types, because we support different oracles. So we support Ethereum, we support Bitcoin oracles. So you can actually have Ethereum contracts pay in Bitcoin. And we also have a Town Crier oracle. Now, what that basically does is it gives, at this point, cryptocurrency prices through this secure enclave onto your contract. So even if those cryptocurrency prices were given not by the origin, not by the data provider, they were passed through a third-party reseller or oracle service, then basically it's still secure. Basically, you can be assured that we didn't change the price or nobody changed the price. Now, this approach is something we're working on pretty heavily. We're putting some amount of money into it. I think it has a very bright future. And I think Ari and the folks at Town Crier are extremely smart people that have come up with a great system. We're thrilled to actually be the ones that are moving it forward commercially. And basically, Jake, to answer your question, the plan is to try and move over to an approach like that, right? So one of the key qualities of a secure blockchain middleware is that it's secure, is that it's not something that anybody could easily tamper with. And trusted hardware, I think, is a I think it's a good next step, as long as the trusted hardware piece becomes available, right? So trusted hardware needs to be made available to the people who want to resell data feeds. It needs to be made available to people who want to run a third-party oracle service like us, right? Thankfully, we have access to it, but it takes some amount of effort. Now, I think that there's going to be more and more high-quality trusted hardware, and that trusted hardware will be reliable enough for you to say, I've contracted with 10 oracles. They all validate that a market price was indeed 7, and they all run secure, trusted hardware. And I know that I have a lot of security on an individual oracle basis, and I have a lot of security in terms of decentralization. And in reality, I think people are going to be willing to pay for both of those qualities as the value of a smart contract increases, right?
So Sergey, like on a very practical level, like just so we can wrap our minds around this, what does it mean? Like, so there's this piece of hardware from Intel, which has an enclave, right? Does this mean like I'm going to be taking that chip, putting it into some kind of device that I'm making, and then that hardware will emanate the data that will be trusted to be secure, or like how does it work? Like how does the
hopefully we won't be all running servers under our beds in order to make our smart contracts work. Yeah, that's not the plan. So the hope is that Intel SGX enabled servers will be available in cloud providers, and they'll be available to companies whose business it is to be an Oracle provider, Oracle service provider. And this is the first way in which you're going to access it, is that you're going to have Intel SGX running on basically certain cloud hosting infrastructure, like AWS or Azure or Google's cloud or whatever it might be. And then you will be able to run certain approved software related to Oracle's in there. And the goal for us is to make sure that the approved software that you run in Intel SGX, functions properly. So that the two things we really need to get right. The one thing we need to get right is we need to have high quality, open source, community driven blockchain middleware, right? And we need to have that regardless of what somebody else does. Like, does somebody else build trusted hardware? Does somebody not build it? Does it work? Does it fail? Like, at the base level, no matter what, we need secure blockchain middleware that people can use, that a data provider can stand up. The second nice to have version of this is if you can apply trusted hardware. And so we're kind of working on both of these approaches. So we're working on the approach where you have blockchain middleware, and then the goal is to transition the blockchain middleware that we've built to run on trusted hardware as that hardware becomes available and usable by resellers of data feeds, by Oracle service providers. And obviously you as somebody who's gonna pay for that, you're gonna pay more. Or you could choose to pay less and not have trusted hardware in the mix. I mean, at the end of the day, that's really what's gonna tell you whether this is useful, right? Like, if there's a very secure blockchain middleware and people are using it, and then the trusted hardware shows up and everybody switches to that and is willing to pay more for that, then trusted hardware has a lot of value. If it's, it really depends. I think for certain smaller transactions, you might not necessarily pay the trusted hardware costs, but for larger transactions or high value financial contracts, I think you are gonna opt for the maximum amount of security that you can buy.
Mm-hmm. Very good. So we covered, I think, very thoroughly the Oracle side of this, but you also mentioned there's a payment side, right?
Mm-hmm.
Can you talk a little bit about how that works?
Sure. So basically, in many situations, the way financial agreements are completed is when the financial obligation part of the agreement is completed, which usually resolves in terms of payment. And if you have an insurance product, or if you have a security, or if you have something else, they will be considered complete once payment is settled, right? Like once you have paid out the interest payment, or once you have received whatever you need to receive in a form of payment. Now, basically what Chainlink does is it allows you to use off-chain payments capabilities. So if you wanted to send a SWIFT message, or if you wanted to a bank system, or if you wanted to have PayPal send a payment, or if you wanted a bank API to send a payment, there's a relatively easy way for you to do that now. And the focus is on like, I'm building a smart contract use case. 10 of the 100 people, or 50 of the 100 people I'm doing it with, they want to be paid in Bitcoin or whatever coin, but 50 of them don't, right? Like 50 of them want to get paid in their bank account, and they're willing to pay the bank transfer fees as part of that service, or they're willing to do that. And I shouldn't just lose like half of those customers or half of those users because I don't have a way for my contract to pay them in yen, yuan, rupees, dollars, whatever it might be, right? Like that capability should exist in a secure, well, it should be secure, right? You're sending money. So yeah, the real focus is on expanding the outputs to what end users want to receive, which in our experience is usually payment in some kind of local bank system or even some app economies, right? Like if you wanted to pay somebody in an app economy in some local virtual currency that isn't a cryptocurrency, you could do that. There's all kinds of interesting things like that. But the point is that you need output to trigger the contract, and you need inputs to trigger the contract, and you need outputs that people want to receive.
Got it. And how does this interoperate with traditional banking?
Right, so that's something we have been working on for a while now. I would say at this point, I would say well over a year now, we've been working on how do you, for example, take something like Swift messages, which power the backends of about 11,000 banks, and how do you get a smart contract to be able to use Swift messages, right? So how do you get a bank system that runs on Swift messages to send a Swift message to a middleware that then turns that Swift message into an on-chain command, right? Or how do you get middleware to, for example, watch a smart contract that's a bond, wait for that bond to say, I need to make an interest payment, for the interest payment to be sent as an on-chain transaction, but to be executed as an off-chain transaction. The way you do that is you have a smart contract tell an Oracle contract, I want to pay this bank account this much. Then you have the off-chain appliance, you have the off-chain piece of the middleware. Look at that transaction and basically format a Swift message that executes that transaction in the Swift network with whatever bank is in there, whatever bank they want to pay to. The bank then, according to how many of these networks work, there are confirmations, right? There are confirmation IDs, reference IDs, confirmations of payment. And then the blockchain middleware will take that confirmation of payment and it'll give it back to the smart contract on-chain, in an on-chain transaction, which is what will complete the contract, right? So commonly, yeah, what we're being, like the situation there is you have a lot of people interested in smart contracts, either in private networks or public networks. And you need a way for their systems to be able to execute signatures, to execute off-chain payments, and to get that payment information to the contract if they're one of the parties in the contract. And the easier, better way to do that is not to go to them and tell them, here's a new interface, or we're going to take your bank system that's been around for 45 years and throw it out and give you a new system. Because as much as everybody would like to do that, that's just not going to happen. It's just not how banks buy software. It's the reason why they still are running servers in something called Cobalt, right? It's because there's so much money running on these old systems that the risk of having something go wrong with the money rolling on them is too high to justify any gains. Or there's other reasons, but that's one of the main reasons. And so the situation that we're going to be in, I would say for another, at least I think probably decade, is you're going to have bank systems that use traditional bank standards, and predominantly those standards. And those standards are going to need to interact with smart contracts in an easy way, right? You're going to need, you want to involve these participants with a lot of regulated capital and a lot of high quality smart people to work on smart contracts. And you want to remove the hurdles. So the way you remove those hurdles is you say, the systems you have today can talk to the systems you want to use tomorrow. And that's how they get to start using the systems of tomorrow. It's because the friction is much less, right? And you do that by basically taking the messaging standards they have, like Swift or FPML or any of the other standards, and letting those standards be used to influence smart contracts, and being able to take what the smart contract does and format it back into something that their systems will understand.
Cool. And can you talk a bit about, and I think you touched upon this already, that you support like Ethereum and Bitcoin, in the course of doing these oracles and payment links. Does that mean that your system is completely blockchain agnostic, creating a world where there are many different blockchains and you're not sure which one is going to win, kind of thing?
The reality is that for a good piece of middleware, you want to have a long feature list, right? So when people show up with whatever APIs they show up with or whatever system they show up with that they want to use a smart contract, we want to be able to let them do that. And if the smart contract that has data about something like supply chain information is for example, in a Hyperledger chain, for whatever reason, right? Let's say somebody sold them a Hyperledger chain successfully. We want them to be able to go get that data through this middleware, to bring it back into their system in a way that their system can understand it. Then we want their systems to be able to make a determination about whatever was told to them by the other chain. And then we want their system to be able to do a payment or change a contract on another chain that is the main financial agreement. So at this point, it looks relatively clear. I mean, it looks like Ethereum is definitely in the lead on becoming the method by which you define the financial agreement, the smart contract's main key clauses. And the other systems around that are something like a payment system, right? So right now you can have an Ethereum contract pay in Bitcoin through our systems. You can do that. If there's a lot of supply chain data in Hyperledger chains in Asia, you should be able to get that data to the Ethereum contract. And if the Ethereum contract wants to pay in, Malaysian central bank digital currency run on whatever chain, it should be able to. So yeah, I mean, this is a really long-winded answer to a very simple question, but the answer is yes. Basically, we support the chains that people want to use for real use cases, right?
Absolutely, and that makes a lot of sense. So one last thing that I'd like to ask is, you mentioned you've been working on this for over 3 years. Ethereum has only been in production for about 2. Can you tell us a little bit about how you got into blockchain and like what makes you so early here?
Yeah, I mean, these are always the funnest stories of all this stuff. But basically, the way I initially got into this stuff was back in 2011. When there was that first price spike to $32, I was playing with this thing and I was looking at it, but I didn't really understand it. It just seemed like something people mine on graphics cards. There were a bunch of YouTube videos about gamers, like 15-year-old gamers, mining whatever and getting like Bitcoins worth a few cents. And it was really interesting, but I thought it was like a gaming thing. I thought it was like a virtual currency gaming thing because almost everybody that was mining were like doing these videos about how to do it. And so I am also a gamer, right? And that's how I heard about all this stuff. And when the price went up to $32, I kind of stopped and I just sat there and I went, like, how is this, like, is this real? Like I've had this is this real moment, I don't know how many times in this space, like recurringly. But I think the first is this real moment was back then. And the interesting thought for me was that in my understanding of kind of economic history, throughout history, whenever you wanted to start an enterprise, that would make you money, that would create capital for you, you would need to make deals happen, right? You would need to do a deal with the people to bring you the wheat, for you to turn it into flour, to sell it to the baker. You would need to get a deal to get the cotton, to weave it, to do whatever. You would always need to do deals with people. And like never in history had I seen that you could just turn on a machine and it would give you money. Like I just kept thinking about that and I could not come up with a single example where you turned on any machine, doesn't matter what it is, and the machine would give you money that you could spend, like, no deals, no conversations, turn me on, I give you money. And I didn't really understand how that's possible, but I definitely understood it was pretty unique. So I think the uniqueness of the fact that was now possible was pretty impressive. So yeah, I just started mining initially, and then around 2013, I started looking into the crop of kind of app coins, the first app coins. And then we started basically putting messages on the app coins. We started trying to encrypt. We encrypted and put messages onto them. Then we basically went on to make something called Secure Asset Exchange, which was a web interface into a decentralized exchange infrastructure. So something similar to Shapeshift or something like that. And we made that back in 2014, and that did pretty well. And then, the regulatory environment wasn't very clear, and it wasn't clear where any of this was going to go, and how tokens were going to shake out. And so we switched focus to SmartContract.com, and SmartContract.com from the beginning, our view of smart contracts for SmartContract.com from back in 2014 has always been you need data-driven smart contracts. So what we would call them externally aware initially. And the first ones we started making was for service level agreements. So they were like, if your search engine ranking goes up, you pay the search engine firm automatically. If your server uptime is failing, you pay less to the hosting company. Mm-hmm. So these kind of data-driven agreements that are complete. You can resolve them end to end from a data point. And so we just had like this immense belief that if you could have complete contracts completely resolved by a data feed, you could just completely change how certain transactions are done. You can just eliminate a whole ton of overhead and a whole ton of non-payment and fraud. And it's just like, let's choose the metric that invariably proves you did what you said you would do, and I will have a guaranteed way to pay you if that metric shows you've done what you said you would. And as long as you've chosen the right metric, and as long as the payments method isn't something people can stop, then the kind of dynamics around these contracts become much better. Basically, that was basically the idea that we started with. And then Ethereum, we were fans of Ethereum since, I would say, the early beginning. We were very interested in it. We were meeting with them before the launch and early on. And like everybody, there were questions about security, and there were questions about how it's gonna, how you're gonna run arbitrary code on all these computers in a limited VM. But kind of as everything got proved out, basically around 2015 or late 2014, we started going more all in on Ethereum, and I think it's great. I think they've solved like the smart contract, and they're solving the smart contract language problem, and I think they take it very seriously. I think this is like a life's work, life mission type of thing of a good amount of smart people that want to see this succeed, not because like their boss told them so, but because they, because of their ideology, they care about this. And so I think they've done a very good job for all of us of solving that kind of middle piece. Mm-hmm. And in reality, I think it's a good thing, because the more kind of individual pieces that get solved, the less platforms will be doing 50 things, Like the way that I think the stack is going to shape out is not that there are 50 platforms doing 50 things. There are 50 platforms doing one thing very well, and those 50 things collectively are what we need to build good production level smart contracts.
Absolutely. Awesome. Sergey, thank you very much for coming on and telling us about SmartContract.com and oracles, and giving us a lot of insight into that. I think it's fascinating. I think we're yet at the very, very beginning of this stuff where no one is really even using it yet. But when this kind of internet spins up, I think it's going to be a very different world. Before we go, is there any, what would you like sort of viewers to know if they want to learn more about your product or activities? What should they do?
So we have SmartContract.com, where you can go and you can connect data feeds to your contracts via an oracle. In terms of other than that, we have the Chainlink network, which is going live soon, for which we're doing a pre-sale now, and we're doing a crowd sale for sometime soon. And we're always very eager to talk to developers who want to be a node operator. So we have a pretty good amount of node operators already lined up for running Chainlink nodes that will give people access to data feeds and payments capabilities. But those, the Chainlink node operators that are going to be able to sell these resources to smart contracts, I mean, if you're a developer interested in running a Chainlink node, and you have knowledge of an API that you could resell to smart contracts, we're also eager to talk to you. So I would say that, or the pre-sale crowd sale thing is happening at the moment.
Awesome. So SmartContract.com to follow the progress of Sergey's product and opportunities to run nodes and participate in the network, and also to buy the token at the event that's coming up. Awesome. Thank you, Sergey, and we'll speak soon.
Yeah, Jake. Thanks for having me on. Thank you. Have a good one.
Thank you. Bye.